Today we're going to review Intel's Q4 2024 earnings call. But first, a disclaimer. The content provided here has been generated by an artificial intelligence model and is intended for informational, entertainment, or educational purposes only. While the AI strives to provide accurate and helpful information, the content may not always reflect the latest research, legal standards, or expert advice. The content does not constitute as professional or any other kind of investment advice, including but not limited to one that takes into account the special needs and situation of each person. The information presented may contain errors and may be subject to market changes and other changes. Users are encouraged to verify any information and consult appropriate professionals for specific advice or concerns. The creators and providers of this AI do not assume any liability for any actions taken based on the content provided. To listen to the actual conference call, you can go to the company's website or find a transcript in Seeking Alpha. Link to Seeking Alpha can be found in the description of this video.
Today we're going deep, as always, this time into Intel's fourth quarter and full year 2024 earnings call from January 30th, 2025. And we're getting all our info straight from the source, those prepared remarks from Intel's interim co-CEOs, Michelle Johnston Holthaus and Dave Zinsner.
Now, for you, our listeners, think of this deep dive as a sort of cheat sheet.
Right.
You know, we're pulling out the most important stuff about Intel's game plan, how they're performing, and their vision for the future, minus all the tech jargon.
We're cutting to the chase.
Exactly.
Right.
Our goal is to make sense of what it all means for the broader tech world and why you should care.
And to guide us, we're looking to Michelle Johnston Holthaus. She's the interim co-CEO, also leading Intel products, and Dave Zinsner, the other interim co-CEO, who's also the chief financial officer.
Let's jump right into it. In their opening remarks, what really stood out to me was the shared emphasis on, improved execution. They didn't talk about some magical solution, but rather a dedication to consistent effort.
I noticed that too.
Right. Prioritizing investments, realizing they can't go after everything, and a real drive to become leaner, more efficient.
Streamlining, yeah. And it seemed like those fourth quarter results really gave them a boost.
Absolutely. They emphasized that Q4 revenue, gross margin, earnings per share all exceeded their expectations. And this positive performance was credited to both their core Intel Products division and, interestingly, the Intel Foundry services.
Interesting.
What also struck me was their commitment to transparent communication.
Yeah.
Actually delivering on their promises.
It did feel like a bit of a shift, yeah.
It did. Another thing, the customer, always front and center.
Oh, definitely.
A very customer-centric approach. Their philosophy seems to be that by truly grasping and solving the biggest challenges their customers face, they'll ultimately deliver the most value for their shareholders. This customer focus really seems to be guiding their strategy across all their business units.
Okay, so zooming in on Intel products, Michelle Johnston Holthaus talked about the division through three lenses. Can you lay those out for us?
Sure. So she structured it around the client and edge computing market. Your PCs and devices at the edge of the network, the traditional data center business serving those core enterprise needs, and then that fast-evolving world of the AI data center. This framework helps us grasp where they're really focusing on the product side.
Got it. Let's start with client and edge. We all know Intel's been the king there for ages. What's their take on the current landscape?
They acknowledge their strong position. Intel powers roughly 7 out of every 10 PCs out there. But they are also clear-eyed about the increasing competition, especially with new players in AI PCs.
Makes sense.
What was interesting was Holthaus described this competition not as a threat, but as a motivator.
A motivator, huh?
Yeah, fueling a, quote, healthy paranoia, end quote, and pushing them to innovate and improve constantly.
So AI PCs are a big deal for them then, I take it?
A huge priority, yes. They emphasize their current leadership in AI PC processors with their Intel Core Ultra family. Think Meteor Lake and the upcoming Arrow Lake and Lunar Lake. Their goal, to ship over 100 million cumulative AI PC systems by the end of 2025.
Wow.
That's aggressive. And it shows they're serious about owning this category.
Yeah.
They also talked up their enterprise-focused AI CPUs with Intel vPro, perfectly timed for that big migration to Windows 11 we're seeing in businesses.
But she also mentioned the software side of things, right? They're not just focusing on the silicon itself.
You got it. They're heavily invested in working with those independent software vendors, over 200 of them, across more than 400 different software features.
That's a lot.
Yeah. The goal is that these new AI PCs will have software that truly leverages those underlying AI capabilities of the chips.
So they're really building that whole ecosystem.
Right. They also gave us a sneak peek at the future. Panther Lake, the first major product using their leading-edge Intel 18A manufacturing process, is planned for the second half of 2025. Then, looking further out to 2026, They're aiming for Nova Lake, their next-gen client architecture. Both Panther Lake and Nova Lake, they're expected to deliver big performance gains while also improving their cost structure and profit margins. That's key to stay competitive.
Right, stay competitive. Okay, let's shift gears now to the traditional data center. It sounded like they're acknowledging some challenges there.
They were realistic about the competitive landscape. Holthouse stated that their primary focus for this year is bolstering the competitive position of their Intel Xeon server processors.
Okay.
Ramping up their newer Granite Rapids processors is a crucial step, and they're also making progress with Clearwater Forest.
Clearwater Forest.
That's their first server product, built on that advanced Intel 18A process. They're aiming for launch in the first half of 2026.
So to stay competitive in the traditional data center market, what's their game plan?
Leverage their existing strengths, particularly the fact that a ton of current data center workloads still run on Intel architecture.
Right.
And their massive ecosystem of partners and software providers, especially in the enterprise sector. They want to stabilize that market share in 2025.
Okay.
And they're also re-engaging with the broader by86 ecosystem, forming an advisory group, exploring custom or semi-custom chip designs to meet specific customer needs.
Interesting. All right, on to that third area now, the AI data center. This is the hot topic everywhere these days. What's Intel's perspective on this rapidly evolving space?
Holthouse was very direct. They acknowledged their strength as the primary host CPU in a lot of AI server setups, and they see big opportunities for AI inference processing at the edge and within on-premise data centers.
Yeah.
But they're not happy with their current participation in that large, fast-growing, cloud-based AI data center market.
Which is dominated by those specialized AI accelerators.
Exactly. They've learned some key lessons from developing and launching their Intel Gaudi AI accelerators, and they're applying those lessons moving forward.
And I remember her mentioning some changes to their product roadmap in this area, right?
Yes. Streamlining their roadmap, concentrating development efforts. Falcon Shores, which was discussed as a possible future product, will now be an internal test chip, not a commercial release. Their focus now is on a comprehensive system-level solution at the rack scale called Jaguar Shores.
Jaguar Shores.
Yes.
So what's driving their AI data center strategy?
Solving real problems for customers, lowering costs, improving energy efficiency of computing resources. They see AI not as some separate market, but as an enabler across all of computing, from the huge data centers to the tiny devices at the edge. And they believe that one-size-fits-all doesn't work.
Right.
They see potential in combining their existing CPU strengths with new AI-focused architectures to offer the best total cost of ownership.
Interesting. Before we move to Dave Zinsner, Holthouse also touched on Intel Foundry services, given that Intel Products is one of their largest internal clients. What was her take on that relationship?
Her message was super clear. Intel thrives when they combine world-leading designs with world-leading manufacturing. As head of Intel Products, she stressed that her decisions on which manufacturing process to use will be based on what's best for her customers. Intel Foundry needs to earn their business. She did express confidence in Intel Foundry's progress in supporting their roadmap and said she's looking forward to relying on them even more as their technology develops.
So that's a good segue into Dave Zinsner's update on Intel Foundry and the overall financials. What were his key points on the Foundry side?
He started by sharing his positive impressions from meeting potential partners and customers. He highlighted the progress of their Intel 18A process technology. He's confident it'll be a top contender in the market. Launching Panther Lake later this year and ramping up Intel 18A production in the second half, those are both expected to boost production volumes and improve profitability for the foundry in 2026.
That sounds good.
But he emphasized that it's not just about having the best tech.
Right, there's more to it.
Trust is essential. Customers need to believe in their execution, be willing to invest heavily in the intellectual property needed to adapt their chip designs to a new foundry. He acknowledged that these transitions often start slow as that trust builds. To speed things up, he's pushing the foundry team to make it easier for customers to port their designs, ensuring they have the necessary intellectual property and adopting industry best practices.
So are they seeing any traction yet with Intel Foundry?
He mentioned the design wins they've secured for the Intel 18A process as validation of their strategy, and they have a strong pipeline of potential customers. But they're being picky, focusing on deals where they can be a strong, valuable partner.
That's smart.
He also pointed to the momentum they're seeing in advanced packaging and their collaborations with companies like Tower Semiconductor and UMC. Those are crucial for maximizing the use and lifespan of their existing manufacturing assets.
Okay, now for the financial performance of Intel Foundry, it seems like there's still a lot of work to be done there.
That's an understatement. Despite generating about $18 billion in revenue, Intel Foundry had negative gross margins and a big operating loss, over $13 billion, for 2024.
Oh, wow.
Zinsner stressed that they're aggressively and systematically reducing costs, with the goal of break-even operating income for Intel Foundry by the end of 2027, and they expect to see improvement starting this year.
Fingers crossed.
Right.
So what'll drive this financial turnaround?
A few things. Shifting their own internal production from older manufacturing nodes, like their Intel 7 process, to that more advanced and cost-efficient Intel 18A process is key.
Okay.
Plus, improving the overall efficiency of their fabs and extending the life of their process technology strategically.
Smart.
Beyond 2027, the goal is for the foundry business to generate enough cash flow to fully support its investments and eventually provide a strong return on investment.
Got it. He also sounded optimistic about the long-term future of Intel Foundry. Why is that?
He's banking on the rapid growth of AI, which is driving massive demand for advanced silicon. He believes we need more diversity in overall manufacturing capacity beyond just TSMC,
Right.
though he still recognizes TSMC as a valuable supplier. He sees Intel Foundry as a key player globally, especially in the U.S., given their investments in research and domestic manufacturing.
And speaking of the U.S., government support was a major topic, wasn't it?
Absolutely. He highlighted their agreement with the U.S. Department of Commerce for up to $7.86 billion in grants under the SHIAPS Act.
Wow.
They've already received $1.1 billion in Q4 2024 and another $1.1 billion in January of this year. He also mentioned progress on the Secure Enclave project with the Department of Defense and their continued discussions with the Trump administration about these vital investments.
That's a significant amount of support.
It is.
And they're also making some organizational changes to the foundry business, right?
Yes. They announced plans to make Intel Foundry Services an independent subsidiary with its own governance and operations, separate from the rest of Intel. This gives them more flexibility to explore funding for both strategic and financial partners in the future.
Makes sense. Okay, let's shift our focus to the company's overall financial results and their guidance for Q1 2025. How did they perform in the fourth quarter?
Intel's Q4 revenue hit $14.3 billion, up 7% sequentially.
Healthy.
Yeah, and that's at the high end of their projected range. That growth was mainly driven by strong performance in their client computing group, their PC business, along with robust equipment sales in their IMS division, and growth in edge computing within the network and edge group. Their non-GAAP gross margin was a strong 42.1%, exceeding their guidance. This was due to higher revenue, effective cost management, and those initial benefits from the GPS Act grants. That was partially offset by inventory reserves related to their Gaudi AI accelerators.
Right.
Their Q4 earnings per share, EPS, was 13 cents, beating their guidance of 12 cents. Operating cash flow was positive at $3.2 billion, though down from the previous quarter, mainly due to restructuring charges.
So what about the full year results for 2024?
For the entire year, Intel's revenue totaled $53.1 billion, a 2.1% decrease year over year. Their core Intel Products division grew modestly, but that was offset by lower revenue from Mobileye and Altera and the expected decline in foundry services. The full-year gross margin was 36%, down from last year. This was impacted by, those inventory write-downs from Q3, lower overall revenue in some segments, and inventory-related effects. Full-year EPS was negative 13 cents, a big drop from the positive earnings the year before.
So a bit of a mixed bag.
Right.
Now, what's their outlook for Q1 2025?
They're forecasting revenue between $11.7 billion and $12.7 billion for Q1 2025. That's a typical sequential decrease. Q1 is usually their weakest quarter. They mentioned headwinds from broader economic uncertainty, potential tariffs, ongoing PC inventory adjustments in the channel, and rising competition. Within Intel Products, they expect revenue to decline across all three main segments at similar rates, while Intel Foundry revenue is projected to be flat or slightly down. This is supported by growing production of EUV wafers, those initial Intel 18A samples, and growth in their advanced packaging services. At the midpoint of the revenue guidance, they're looking at a non-GAAP gross margin of about 36%, an estimated tax rate of 12%, and break-even EPS.
So what about their expectations for the full year 2025?
They anticipate their overall gross margin will improve throughout the year, starting in Q1. But the gross margin for Intel Products is expected to decline in 2025 because of changes in their product mix, both in PC and data center. However, the gross margin for Intel Foundry is expected to improve thanks to rising EUV wafer production and growth in advanced packaging, even with increased depreciation expenses from their investments. They're still targeting operating expenses of $17.5 billion for 2025, with plans for further reductions in 2026.
Okay.
They expect total gross capital investments of about $20 billion and a net capital expenditure after government incentives and partner contributions between $8 billion and $11 billion. And deleveraging their balance sheet is still a major focus for 2025.
So a lot of moving pieces.
Definitely.
And there's a change coming in how they report their business unit performance, isn't there?
Yes, they'll implement a new segmentation and reporting structure starting with their Q1 2025 earnings release. This involves moving edge computing from the network and edge group, along with their automotive business, into the client computing group.
Okay.
The networking part of network and edge will move into the data center and AI group, while their IMS equipment business goes from Intel Foundry to the all other category.
So how does Zinsner wrap up his financial overview? What's his overall assessment?
He emphasized that while Q4 showed good progress, improving profitability is still critical. He and Michelle Holthaus are committed to taking the necessary steps to strengthen their competitive position and improve the performance of both Intel products and Intel Foundry services. He also briefly mentioned the search for a permanent CEO, saying it's progressing, but with no new details to share.
So to sum it all up for you, our listeners, Intel is clearly in a period of transformation. They're laser focused on improving execution, especially with their foundry business.
Right.
They're navigating a competitive PC market and aiming to become a bigger player in the AI data center market. Improving their financial performance is a top priority, and they're relying on government support and strategic changes to achieve their goals.
This raises a key question. Given Intel's ambitions for their foundry business and the strong government backing they're getting, what could the long-term impact be on global semiconductor manufacturing?
Yeah, good question.
How might this shift the balance of power in the industry?
Yeah.
The dynamic situation to keep an eye on.
Absolutely. And we'll continue to follow these developments here on the Deep Dive.
Right.
Thanks for joining us for this deep dive, and we'll be back soon with another fascinating topic.